Good afternoon and welcome to another episode of the Stock Market Today video where we try to wrap up the week's action for you and give you kind of a little bit of homework for the weekend and a little bit of where are we now for the markets. And that has been a challenge the last couple weeks, but to help us break it down is Ed Carson, our news editor. You're also on the earnings cheat sheet. You've got all the hats you're wearing. What are some of the stocks that you want to talk about today, Ed?
Yeah, around here at IBD, there's not many men without hats, I will
Yes.
say,
Okay. There
even
you
though the
go.
safety dance might be useful. I want to take a look at Nvidia. Obviously, that's going to be huge for the coming week, and Valero and CME as well. But we can look at a whole bunch of things if you'd like.
Yeah, I've got to say your music references are very different from Mike Webster's. Just just going to note that from the outset. Okay, I'm going to go ahead and share my screen, and we'll go through some of the markets, and then kind of try and make sense of what we saw today, and again this week. So the Nasdaq Composite that finished. Look, it was downright ugly for a little bit there with the gap down at the open. We were down almost another 2%, down 1.9% intraday, but finished with a 0.13% rise. Qs were kind of in the same boat, almost exactly. The SPY, when we take a look at that finished down, it looks like about 0.1%. It was also well off its highs, down as much as 1.4% intraday. So a lot of these we got up to maybe the upper quartile of the Nasdaq and maybe the 65% range for the S&P 500, and then IWM, the Russell 2000, that finished with about a 0.19% gain. I'm showing, and in the upper quartile, that was down over a 1.5% today. But let's go ahead and shift back to the Nasdaq real quick, because certainly, Ed, it seemed like at least for the start of this week, it was a big, okay, tech, no good. Medical, yay. And then it was kind of, seemed like that's what the story was even this morning. But then, man, a lot of those tech names came back with a vengeance.
I mean, we started pretty broadly. I mean, it was a powerful gain on Monday, and a lot of techs did rebound, like Palantir, surged higher. So there were a lot of names that looked strong. Then it was sort of pausing for a while. There wasn't a whole lot of movement
Hmm.
and in there, so it was strange because we continued on. A lot of the gains early in the week were in expectations that the government shutdown would end, and it did end on Wednesday night, but that became sell the news kind of event. But yeah, we surged on Monday, and so
And
the
that was
Dow
when
hit
it
a
was kind of like a deal was imminent, right? It
we
was
knew it was
like,
imminent.
oh,
Even on Friday,
yeah.
there was progress. I was like, okay, there was
Hmm.
enough movement that you started seeing it was probably going to end soon, and that turned out to be true. So big pop, and then, uh, yeah, I mean, so it was interesting. The Dow hit a record high on Wednesday, so there was clearly, and that's partly reflective, as you were talking about, the drugs, the financials were doing better, and so that's why. And there was a lot of those names in there. But then on Thursday and Friday, everything. Well, Thursday really ugly once again. I mean,
Hmm.
AI plays really sold off. Some of it may be concerns that the Fed won't cut rates in December, but that might have just been another excuse. I mean, honestly, and then we bounced on Friday, and yeah, in the upper part of the range for the most part. But we didn't close well for the week on a lot of these things. Like the Nasdaq, they weren't very high in the range, especially where we started on Monday. These
Hmm.
weren't great closes. They weren't the worst. Don't get me wrong. And we sort of faded to the close today. I don't know. The last several weeks, obviously, the last few weeks have been very volatile, daily and weekly. But really, the last several weeks, it seemed like 4 weeks ago, it was like we were getting out of that. But really, for the last couple of months, we really haven't gone anywhere. But I have not had a good time. It's not been
No.
a good time for me
Yeah.
because it's like you buy on some strength and then you sell on weakness, and it's been tough
Yeah.
out there.
Well, even and look, one of my strategies, I love upside reversals. Just I think that they're great. They help you manage risk. But what we're seeing a lot of is, you get a perfect Friday upside reversal last Friday. You get the follow-up strength as you would expect with a gap up above your 21-day moving average line. It's like game on. And then what do we get today? An undercut. So you
Yeah.
have to kind of you have to really be thinking seriously of cutting as you undercut the upside reversal day. But then what do you get? another upside reversal. So you're kind of almost buying back stuff. Now, this time around, a lot of times I do watch the first 5 minute bar, the first 10 minute bar, and we did really start coming back very quickly today. So
Yeah.
that helped if you just were able to take a little bit of a pause just to see how things shaped up. And then what I was doing for a lot of my stocks is, okay, I was just raising my stop to, what started out was, let me see if I can get out at a better price, started out to, oh, you know, I would buy this stock today if I didn't have it already. So very, very unusual action. And again, as you mentioned, like October wasn't great, because remember we had that October 10th, the spat between President Xi and President Trump. That kind of started this latest sideways cycle, but it seemed like it was over when we got back to highs. But then again, November hasn't been any kinder than October was.
Yeah, and I would just say that I sold some stuff on Thursday, didn't on Friday because things reversed so quickly. I was getting
Yeah,
ready
yeah,
to,
yeah, yeah, yeah.
but because I bought near the top of the hammer, I wasn't going to buy at the very low on that prior Friday because we were tumbling.
Mhm.
I mean, maybe some were quicker than others, but I bought. But I was down on a lot of things, and especially if you bought on Monday, this Monday, you were really down by Thursday. So I think a lot of people probably needed to be cutting things, especially there was a lot of AI plays that some pretty big losses that really undercut. And we'll take a look at things and it'll be clear that a lot of growth names were a lot worse than just sort of round tripping the weekly gains.
Yeah. And I think that's an important point, Ed. When you do some selling, it doesn't have to be everything, but because you were doing some selling Thursday, and I'm right there with you, I was doing selling as well. It kind of gives you, for an upside reversal like today, either the cash to redeploy, and in a lot of cases, you were potentially getting things at lower prices, even if you were buying them back. You're getting them at lower prices than where you exited, but it also kind of takes some pressure off when you get that gap down, like we did this morning. One of the ways I was personally able to wait a little bit was because I had reduced on
Yeah.
Thursday. I think if I hadn't reduced on Thursday, it would have been a lot more panic mode, where it's like, oh my gosh, I've got to do something. I'm just losing too much money.
Yeah, you want to let off some steam before the pipes burst. I mean, because you're going to at some point. You may think you won't, but you
Yeah.
will. I mean, and so yeah, so
Protect yourself from yourself.
yes.
Before we move on here, I also wanted to just kind of address the breadth issue. RSP, which is the equal weighted S&P 500, it was looking like it was getting some traction here after the Friday reversal, last Friday's reversal. Looked like it was getting some traction back above the 50-day moving average line, but notably, that went right back below its 50-day moving average line on Thursday. So it's kind of back to it. It's not necessarily that the equal weighted is showing a lot of weakness, because there's still some areas, medical and some areas that haven't been participating. Financial was looking good, but then it got clobbered on Thursday, as you said, with a lot of the fears that a Fed rate cut isn't going to be, the chances of that are going down. So what are your thoughts here on the equal weighted?
Yeah, the equal weight does show it was interesting because they weren't falling as much necessarily, but they were already weaker. I mean, when you're in a
Yeah.
weaker position, because Thursday's drop wasn't as big as the Nasdaq, say, but it made it go through the 50-day line. And that's another thing is that, okay, the major indexes didn't have a good week. The Dow actually was up, and the S&P was up a little bit, but it was a tough week, but yeah, basically everything else is below the 50-day. I mean, in terms of like RSP, QQEW, the Russell. And some of the growth ETFs like FFTY, ARKK, and I know we can go with all that, but everything else is showing weakness, some of it significantly weaker. Yeah, there's some bounces here and there, but that's way below last Friday. Never got above the 50-day line. And the ARC is the same way, and QQW. So there's a lot of weakness out there that, in there. So again, on the one hand, it's nice that maybe some of the speculative names came off and the market is still holding up somewhat, but the market needs to, it can't show a lot more damage before I think we'd really be, concerned.
Yeah, very good. Well, let's go ahead and take a look at some more sectors, and just kind of get a sense of what's going on there. I'm just going to another area. Okay, as we usually do, we start with the worst first, and man, one of the one of the worst areas right now is the cryptocurrencies. I bet here's the Bitcoin ETF, uh, Ethereum, not much better. But what's happening here?
I don't know really. I mean, obviously speculation and high beta stuff is weak. And maybe, the dollar has been strengthening. And if you think the Fed isn't going to cut rates, the dollar in the market, the stock market reopen, I mean, the stock market, the government reopening
Hmm.
is also one reason why you're not going to have the Fed cutting rates, perhaps, because now, I mean, because that was a concern that the economy would, see more weakness. And so that was an argument for cutting rates again. So, I mean, all these things, maybe there's just pressure on it, but I don't know why it's down so much. It really is. And, but you can see the relative strength. It never really confirmed. It got above a high in August, but the relative strength didn't confirm. Got above it to a new high in early October, but didn't confirm. And now it's really been, breaking down. Got back above the 50-day line a few weeks ago, couldn't hold. Got back down below the 200-day, got above the 200-day line, boom. So again and again, so this is something clearly, unless you bought this, when Bitcoin was at 20,000 or 50, like way below, not 20,000,
Hmm.
but something way below, there was a lot of sell signals to be getting out of this. So I don't know why it's doing it, but it's that is not. I don't want anything part of it really.
That's kind of my go-to for my crypto analysis. I don't know why it's doing it, either on the upside or the downside, but
Yep.
I can look at the chart and say whether I want to be partaking or I don't want to be partaking. In a similar way, gold was really hit hard this morning. It was off a little bit yesterday, but really slammed today. Gold miners were a little bit better. There were a lot of these that actually recovered quite a bit more and finished well on the top of their ranges. But what's your take here?
I don't know. Maybe there was just some selling because people were trying to liquidate things because they were
Hmm.
losing elsewhere. I don't know, because you would have thought that the fears would drive people into it. But if you think part of it is because the Fed is less likely to cut, I don't know. But ultimately, gold had an okay week. I mean, this held up, but it's also a reminder that you can have relative strength, but if the market sells off, you can still be a loser. I mean,
Yeah.
I'm not saying gold was fine this week. I mean, but you can see how Thursday, Friday, yeah, it wasn't that bad, but held up better than the market, but still, well, I guess maybe it didn't, but it's like, it's still something you have to watch out for. You can't just say I'm going to be fully invested in defensive areas and everything's
Hmm.
going to be safe. It just may mean you fall less. Cash can be a great position
Hmm.
in a tricky
Absolutely.
market.
Well, and it's, one of the tough parts here too is, okay, you would see maybe an entry here as it
Yeah.
crossed above its 21-day moving average line. And then what do you do when it fills in that gap? And again, this morning it was below the 21-day moving average line, below its 50-day moving average line. That's enough to really kind of give you some unsettled thoughts for what's supposed to be kind of the safety play. XLF, a lot of the financials were hit hard yesterday. This was back below its 50-day moving average line, down a little bit more today. This did not look like the rebound that we saw in a lot of other areas.
Yeah, I mean, obviously, there's other areas that were a little stronger and gotten up to new highs, but they still got hammered Thursday, Friday, say. I mean, so not great. I mean, obviously, the relative strength line has not been great for this, but this was improving, and the relative strength line didn't weaken that much in the last couple of days. But again, you just when you thought maybe you could buy them, then you could get hammered. If you bought on Wednesday, say XLF, which would have made some sense, you're down, say 3%, on that, and that's just right away. So not great there.
Mhm. I'm going to contrast this to a degree. KBWB, this was still again weak, but at least this closed better.
It closed better and it started off stronger. But the problem is if you bought later, it's like you could still see those losses. But yeah, it's just where do you got it? Where do you get your edge? Anywhere. It just
Mhm.
finds it hard. You think you got a spot. Aha, I'm going to diversify. I'm going to go here. And then, but so that was disappointing. I still a lot of stocks in this area are still worth watching. Maybe they can set up again. They are by no means broken. Uh, whereas a lot of growth names really suffered damage. These are not. These could easily be repaired.
Yeah. Just walking through a couple kind of fast. XLB, that was getting back above its 200-day moving average line earlier, got turned away at its 50-day moving average line. That's the materials. NLR, the nuclear plays, that's been suffering. A lot of these things that were on a little bit more of the speculative side, power related, those were really ramping up in a big way in October. But man, once they peaked, they've come down, quite a bit. This did finish in the upper part of the range, but still in a little bit of trouble. But I also want to spend a little bit of time on healthcare, XLV. Now, this did come down today, but this does seem to be an area where we are seeing a lot of that movement into these stocks.
Yeah, and I think ETFs might be a good way to play it because some of the names are a little extended while others may be like in bottoming base. And so, I mean, it's nicer to find individual stocks, and there are definitely individual stocks in XLV, XBI, and some things. But yes, this is clearly coming on. And just like, say, Eli Lilly, the relative strength rating, I'm sure was terrible. If you go to the related panel, I'm sure if you look what it was like 2 weeks ago, 3 weeks ago, I'm sure it was pretty lousy. Yeah, 46, 4
Yeah.
weeks ago, 3 months ago, 23. So it's bouncing back. I mean, and that can happen when you do a sector rotation. Sometimes the relative strength is really weak, but that can quickly come back, and we saw that. This is definitely an area. Defensive growth growth, they're somewhat insulated from the economy because insurance covers a lot of it, the government covers a lot of it.
Mhm.
There's a lot of reasons why you can go to healthcare when things are okay, not great, and yeah, definitely a lot of things to mine here.
Yeah. And we will get to kind of the biotechs in a little bit as well. That just ended up being one of the strongest areas. Um, Shutting this down over on that panel, XLC, the communications, of course, this is Meta and Google, um, combined for about a 40% weight. This is almost at the lows that we saw in October. Below the 50-day moving average line, below the 21-day moving average line. Not much help there.
Yeah, Google still looks okay. Didn't have a good week, but Meta just looks awful. I mean, it
Yeah.
just be there's no way around it.
Right. And when you're at 20% weight, it's hard for
Yeah,
XLC to get much traction there. RSPC, this is the equal weighted, doesn't look much better, to be
no.
honest. But XLY, speaking of kind of a big difference, the XLY, this was looking a little bit stronger, but Amazon and Tesla, both are the big components here, and Tesla certainly suffered quite a bit this week as it got below its 50-day moving average line. The RSPD, which is the equal weighted consumer discretionary, also not showing much strength right now.
Yeah, so
Yeah.
sometimes we had a couple of big names propping them up, but take them out and they're still not good.
Right. We talked about RSP again, just going through where things finished, and also QQEW. That was also off its lows, but still below the 50-day moving average line. ARC-K, taking a look at this. This did reverse, but man, this has been hit. It's below both its 50-day moving average line and the 21-day moving average line, with that 21-day crossing below the 50-day now.
Yeah, I mean, some of this is Tesla, but there's plenty of names in this that just hammered. And we saw high beta growth was really hit in the FFTY arc, you name it, NLR. There's a lot of things. Whatever had those high names, quantum plays, everything. They're all really, really hit, and that's just you have to recognize that all the fun that you might have had in September, October, that's not fun anymore.
Yeah, right. Now, staples, the consumer staples, that seems to be kind of an area of, temporary strength. It's still below its 50-day moving average line, so not something to get overly excited about. But there are some of these stocks that are kind of considered where you hide. And that has been a little bit stronger as of late, as you can see with this relative strength line popping up recently.
We will get Walmart and TJX. Walmart, I'm sure, is in this, and TJX, I don't know if it is, but certainly could be sort of that. And those two names are doing a little better. And so there'll be a lot of retail names with those two in particular.
Yeah, Walmart is the top weighting there
Yeah.
with over a 10% weighting. So yeah, definitely worth looking at and keeping an eye on that earnings report. Continuing on with our list, we also have SPY that we talked about. The industrials, those again still below their 50-day moving average line, but off their lows today. But let's talk about SMH. This got right down to the 50-day moving average line, reversed, and actually closed positive for the day.
Yeah, this is interesting. Taiwan Semi, which looks probably the closest to this, did something very similar, as I recall. Yeah, I mean, okay, not quite as strong. It actually basically is trying to hang on to the 50-day. But yeah, SMH is still looking good. This is another one where AMD is sort of too extended, but if you wanted to play it, SMH seems like a good way to play right now because, you know, there's out there, but really it all comes down to Nvidia Wednesday night. I mean, that'll be just absolutely enormous. But this is an area that's still holding up. AMD is strong. Nvidia's in a buy zone. Taiwan Semi and Broadcom aren't that far from being, useful. And there's a lot of other names, uh, but it's often very much the giants. A lot of other chip names like ALAB and others are not looking good, and they're just not. So definitely have to be. So SMH actually seems a reasonably good play right now if you wanted to play the chip sector. I would be hesitant ahead of Nvidia earnings, but this seems like a good spot, and it's holding up pretty well.
Yeah, and we did add this to Swing Trader. I got a position in a related ETF myself. XLU, the utilities. Now, Utes has been one of the ones that we've been watching very closely. A lot of the electronic, contract manufacturers, the people providing power to all these AI data centers and everything like that. Those have been under some pressure, but you had something like VRT, which is on the leaderboard, getting support, and again XLU getting it didn't close well, but it closed positive, so that's why it's kind of a little bit better than most today.
Yeah, I mean, and I think sort of a side note, it's a lot of this is where buying right is important. Buying early or buying close to the buy point is important because we've seen a lot of with the volatility. I mean, it's always important, but honestly, if you bought extended in April or May, you probably were okay. Okay, because things were rip roaring and you ended up you could get away with it. But in a sideways choppy market, boy oh boy, if you are going to do buys, make them early or make them right around the buy point. Otherwise, chances are it's hard enough as it was buying right, but if you didn't buy right, you're really in trouble.
Yeah.
I've been confused with XLU just because it's a combination of super defensive and AI. It's like, what the heck is that? It's like Dr. Jekyll and Mr. Hyde. I don't know what I mean. It's more of the safer AI type of plays, but it's still a weird situation. As opposed to what you would normally expect with that.
Yeah. FNGS, the Mag 7, again, that had a nice reversal. We already talked about the Qs. XLRE, that ended up the real estate ETF, sector ETF. That's still below the 200-day, still below the 50-day moving average line, but finished with a 0.3% gain. ITA, the defense, this ended up, finishing at the top of its range, but that's below the 50-day moving average line. There's some select names in there that look a lot better.
There are select names that look better, and you can see even this one. You could imagine just one or two good days, you could see a real trend line. Where some of the other things are so up and down, up and down. It's like, okay, it goes back above the 50-day line. What does that mean? But here, if it went clearly above the 50-day line and got above the short-term highs, it's like, oh, okay. So you could see that. But yeah, there's definitely some names worth looking at, but not many that are in position right now.
XLK, the technology ETF, sector ETF, that was well off of its lows with a positive gain over 0.5%. Worth noting, of course, what is it? Nvidia and Apple are the two big heavyweights here.
Yeah.
Microsoft up there as well, but RSPT, a little bit of a different story. It's not up nearly as much.
Yeah. Just a couple of names. There's still so much dominance in that area.
IGV, the software that was getting support at its 200-day moving average line, some suffering lately there. But again, this software is some of the bigger names that aren't necessarily participating as well. One of the areas that does seem to be coming on a little bit stronger, however, is XLE, the energy. Of course, XLE is really dominated by ExxonMobil and Chevron. But even if you looked at the equal weighted of this is RSPG, that's not a bad look there.
No, there's definitely some things going on. I think OIH is doing better, and there's definitely select names in there.
Hmm.
Refiners are doing better. I don't have an ETF for that offhand, but like there's a whole bunch of names like VLO, which I suggest we look at, but that are either in buy zones or extended now. So yeah, and I think natural gas has been rising. So natural gas plays
Hmm.
also, some of those are improving. Like
Oh,
UNG, with UNG.
yeah.
I mean, it's
Whoops.
not tremendous, but it's picked up a
Uh,
fair amount in the last few weeks. So, whether it's oil or gas, there's definitely some strength
mhm.
there. You just never know if that's going to continue, but there's definitely some quality names in there that that go to a different drummer. They're not as worried about what the rest of the market's doing. Oil does sort of its own thing.
Yeah. And XBI that kind of took the reins today. Big move here, almost 2%. I do have a position in XBI. This is also something we have on both Swing Trader and Leaderboard. But certainly the biomed biotech area, even stronger than the medical in general, with a lot of names doing very well there. Let's shift gears and talk a little bit about some stocks. And of course, as you mentioned, all eyes are going to be on Nvidia next week with its earnings report. Support at the 50-day moving average line. Another one of those cases where you had a great upside reversal last week. Nice follow up with the gap up on Monday, but then, man, right back down. Although, to its credit, it didn't undercut Friday's low. It got
Yeah.
close, but it didn't quite get there.
Yeah. So better there. It held above the buy point. It held above the 50-day line. I mean, so much better than a lot of other names that showed a lot more damage. That would have been hard to hold even if they bounced back. This one, the chart doesn't look as damaged. It's still, how can you? It's hard to trust it. What are you going to do if this moves up again? How much are you going to get excited by it? But earnings so important. It's going to be strong. Jensen Huang has been making it clear that demand is strong. They've also made it clear that there's some concern about supply, like can Taiwan Semi ramp up enough production? Can all the components in the supply chain? So that's a bit of an issue, but it's really, can they meet and beat the high expectations investors have for this? And not just for Nvidia, but for everything else, given that there's so many, the energy plays and these cloud computing plays that are really have been selling off. Is Nvidia going to say things that's going to inspire them higher? I mean, honestly, or flip side, if Nvidia goes down, boy, there's the AI ecosystem in terms of the stock market looks pretty weak right now. So
Hmm.
Nvidia, that would be really telling. But yeah, this will be interesting to see how this goes. I also note that Nvidia, when it does report earnings, it does have a tendency. I've seen it gap up and reverse lower a couple of times. I think in the last year it would do that, or either that day or the next day. So you can't necessarily be super excited at the open. I mean, we always say that, but you think, oh, Nvidia is safe. It's not going to be so volatile. Everybody knows what's up. It's like, nah. Definitely, I would wait a few minutes, even if it's positive. But yeah, this is an absolutely enormous earnings report, especially with a lot of other tech news sort of dying down.
Right. And as you often note, for some of these stocks that are these big heavyweights, you got to be thinking of kind of the follow-on effects that happen. And we certainly saw that to a degree with a lot of the capex spending that
Yeah.
some companies were talking about, and what that was going to mean for their vendors and suppliers and everything else. But yeah, definitely an important component of Nvidia. And I'm assuming we probably will have live coverage on this earnings report. Do we
Yeah,
typically do that?
Patrick Seitz has been covering this the last couple of earnings reports, and so I'm sure we'll be covering that. He does that a really good job on that. So yeah, I mean
Hmm.
that'll be really exciting next Wednesday night.
Yeah, Very good. You mentioned Valero earlier in the refiner space. Again, so much strength and energy where it really hasn't been participating hardly at all in most of the year. Really, a lot of back and forth action. But some of these refiners have looked very different. Whereas XLE was struggling around its 50-day moving average line and even its 200-day moving average line. Some of these things like Valero have been trending higher. They've been kind of going on this rising 50-day moving average line for a bit here. So what's your look on Valero? And I should disclose again that I do have a position in this.
Well, I definitely want to hear your take because I did not take advantage of this. But look, I mean, whereas XLE is more tied to the price of oil because Chevron and Exxon, though there's lots of things going on with those companies, but ultimately it's the price of oil is the biggest thing. But for Valero and refiners, the biggest thing is the spread between the price of oil and the price of gasoline and diesel and other things that they make. And that has generally been pretty positive in 2025. There's been a wider spread. And so, and with refiners, it's something you want to buy or get into before things really turn around. You can see the earnings were terrible, terrible, terrible sales. And then finally a turnaround last quarter. Sales were still down, but the stock had already made a big move. You can see it's already basically almost doubled from the April lows. And, so there's that. But breaking out here, but there's a lot of names like MPC broke out. There's a lot of names. PSX, I think, is around a buy point. So pick your poison. There's a lot in there, but the relative strength line looks good. I think you should. I mean, my mindset is you've got to think about a lot of these things as swing trades to a certain extent because you just never know how these things are going to go. Now, sometimes they do go on amazing runs, but I've always had trouble. They always seem to, if the prices swing. I mean, look, if gasoline prices fall 5% and the crude oil goes up 1%, Valero is going to have a terrible day, and there's nothing you can do about it. To a certain extent, oil stocks are always a little bit of there's an earnings report every day. So that's always makes it tough to hold them, though they've been acting extremely well. I like the volume. Look at all the volume spikes. I mean, lots of skyscrapers in the past few weeks that were positive and not really much on the pink, not at least not since the last month. So I think that's great. I think if we went to a weekly, we'd see a really strong up-down volume ratio. I'm assuming. I mean, it's only 1.1. I would have thought a lot more. I would have thought like 1.5, to be honest with you. But so why did you get into this name? And is there any reason why you got into this particular name?
You know what? It was really just because, again, to protect myself from potential rotation. What are some of the areas that were looking stronger? But you're absolutely right. And if you were guessing that I was treating this as a swing trade, then that's exactly what I'm doing. Because again, I'm not smart enough to know long term what's happening with any of these oil stocks. But I can look at a chart and say, okay, I can manage my risk here. Probably use the low of today, and if it undercuts that, then I'm right back out of this. Maybe even sooner if I get nervous. But turning over to the financial, one of the areas that has been kind of benefiting from volatility is the CME group. This, kind of with all these gyrations that we've seen lately, it seems like, CME has just been largely untouched. And I do have a position in this one as well.
Yeah, this one seemed like had an early entry around 275, or you could have down, somewhere in there, or even earlier, depending on how you wanted. I don't know. You could have been a downward sloping trend line if you really wanted to get aggressive. So that's often a good way to do this. I think with CME because it can sometimes go up and it's just hard to really move because the earnings growth isn't tremendous. You saw that in the last quarter, not so great. One can imagine it might pick up because of the volatility. Another growth thing for them is they're teaming up with FanDuel to do some sports contracts. So they're getting into that prediction market type of situation that can be interesting. I think at this point it's getting close to a buy point. I don't know where you picked it up, but it seems like it's getting up there in terms of extended from the 50-day line. So I would love to see a handle form here. I don't know if it will do that, but that would be something nice to see. But I like the volume that's been coming in. And this is when you sort of got to look and say, it's not going to grow a whole lot. Maybe this is another one I would think is a swing trade because again, I just don't. When you don't have that much earnings to push you as a tailwind, it's hard to get a really big move. But it has gone on moves. You can see that you can sort of see last year there was a good move at times. It had made a really nice move from the like the middle of last year to to April, and so it can go on big moves even when the earnings are just so-so. So don't. I mean, I think that was another smart pickup by you.
And I think we have this on Swing Trader
Yeah,
as
you
well.
do.
So yeah, so I bought this after the restriction period. So this was actually last Friday that I picked that one up. We can kind of end the show with just a quick look on some of the typical Webby charts that we do. But even though Webby is not here, he's actually on the road driving in his Cybertruck, you know, playing Willie Nelson or something like that. The Webby RSI, look, those are still kind of messy. There's just a lot of breaks in those. But one of the things that we've been covering on IBD Live, and Chris Gessel, our chief content officer, brought that up again today, is our regression channel lines. So I'm going to pull that up real quick. Is that showing up for you?
Yes, it is.
Yeah, so here's the S&P 500. Just as a reminder, where we're setting our regression channel lines, we did move them from May 12th to July 23rd is where we had them before, but we did move that to August 1st to October 10th. And again, we're just choosing that end date as a 50 days from our beginning anchor point. And you can see that we have clearly come out of the range here of our regression channel line. We did that here and spent a little bit of time below it. Seems like it's getting out of range a little bit more now. So these are probably getting close to being thrown out. Here's the NASDAQ composite, kind of in the same boat. The Russell 2000, even worse. This is obviously
Yeah,
no
that's
longer.
broken. Yeah.
Yeah, that's broken. It's can't use those regression channel lines anymore. We'll be looking for kind of a new entry there. And I guess one of the things we didn't really discuss, I just kind of glossed right over it. You mentioned it kind of at the beginning. Thanks for the reminder. But the Dow, you mentioned how this was you know making new highs, and I guess that's something to kind of end with. It's kind of funny um, how hard it's been lately, but we really haven't been off highs that much in the
No.
indexes. Now, some of the individual stocks, that's been a different story. I mean, we're seeing some of these high flyers that are 20%, 30% or more off their highs, but the indexes themselves, are really, you could see it easily getting to new high ground next week.
Yeah, and even the Nasdaq and the S&P are really not far as well. I mean, they could punch off, and everybody's like, "See, look how excited you should have bought Friday, and certainly Monday." It's like, we'll see. Yeah, I mean, yeah, the indexes look pretty good, and there's plenty of names that are still hanging around there. It's just been tough to find an edge. I mean, it's just been tough to get a footing here. I mean, and I think that the regression line sort of made it clear. It's like things are starting to break below what we were used to. We were in this nice steady channel. I think if you call up the Nasdaq, I mean, you don't get just eyeball it. We had a pretty steady uptrend. I mean, it was a nice and it was powerful. Yeah, we had
Heck,
that
just
super
using the 50-day line,
just using
you
the
can
50-day
see,
line. I
or
mean, boy,
21-day, really,
yeah.
because we were trending above the 21-day line for so long.
So there was so much of that, and now it's sort of like we're starting to have that. We're getting choppier. Now we really haven't spent that much time below the 21-day line before. And again, you can go back a couple of months basically at this point, and the Nasdaq is basically where it was. I mean, there was, you can see it's not just there; it's even back to there. Like that. We really haven't made any progress. So, I mean, that's just something, it just makes it hard to headway. And so I think that it felt like it. We were making highs. I mean, I was probably at my peak in early October or middle of October, like the market. But in the end here, we're not there. So I just think that investors have to recognize we're not in that time period anymore. Maybe we'll be there again and we can start up again, or maybe we'll take a break for a while, or maybe we're going to go through a correction. I don't know. But right now, the market is just not in the same environment that was providing a lot of easy gains that and we don't, and not just that, we don't know what's really going to lead. Is it going to continue to be drugs? Is it going to continue to be our financials going to do that? Are they going to struggle around? Is tech going to come back? There's a lot of uncertainty right here. So it's just an environment you can still be invested, especially if you have longer term holders, but it's just know the environment is just not as conducive to be stepping on the gas. It's like when the weather conditions get a little tougher, the road gets a little windier, you naturally slow down a little bit. It doesn't mean you stop, but it means that you definitely want to take it a little bit, more cautiously.
Yeah, and you know what? It's funny because you were talking about this area right there, and where your highs were. I think September 22nd. That's exactly where my equity curve peaked. And I mean, once I once I adjust for contributions and everything like that, September 22nd, I'm almost positive was my peak. And as you said, it's been kind of a tricky market to make sense of. There's been a lot. It just hasn't been as easy as it was, with that start back in April 22nd follow through day. So, but hey, I think the reminder that a lot of our folks are giving. We had Jim Ropel on IBD Live today. Joe Fahmy was on the podcast on Wednesday. Is the reminder that in a bull market, it's very typical to have pullbacks.
Yeah.
And if you think you're not going to get that, I mean, even like as you mentioned today on the weekly chart, you were only down 0.5%. It didn't feel like that if you kind of do the blow by blow for the week. You were tossed all over the place. But it's kind of like the same thing where if you can't swim and the average depth of the water is 1 foot, well, that doesn't help you when it goes down to 6 feet and you can't swim.
Yeah.
So the average sometimes doesn't tell the story. But anyway, Ed, just kind of in closing thoughts, what is kind of the weekend homework, and what should folks be looking at in terms of doing for their portfolios next week?
Well, look over your portfolio. Were there things that, you didn't, I mean, it's like, did you not pay enough attention to it? Did you not, do you need to exit some of them, but definitely rank your portfolio, as Webby often will say, from A to D kind of thing, A to F, and see if, what you might want to pull, and develop those watch lists. The watch lists are not only useful for thinking about buying opportunities, but give you a sense of where strength is moving into the market. If you're doing a wide spread, even things that are off, not quite set up, you get an idea, oh, these things are starting to move up. So I think building up those watch lists, because you want to be ready. I think that in this kind of environment, you have to buy early and stuff. So if you do anything, you want to be ready. So have those watch lists ready to go, and watch lists and exit strategies, because it's definitely an uneven market and it's not clear where things are going to go. So I think you just got to be ready for anything.
Yeah, no, absolutely. And hey, thanks a lot, Ed, for sharing your thoughts and making sense of this as best as we can. And just as a reminder, Ed is on multiple times a week on IBD Live, so you can catch him on that. He also has the earnings cheat sheet that he does with Alexis Friday mornings is when that comes out. And of course, your futures column is one of my go-to things as the market wraps up, and what I need to look at for the next day. Very, very good follow on X as well. You're at IBD_E Carson, right?
That's
Yes.
correct.
So, yeah, you're always doing a lot of great stuff on X. So, a very good follow there. So, thanks again, Ed. Have a great
Thank you.
weekend. Okay. That's going to wrap it up for us this week. Thank you so much for watching. Webby will be back next week, and we hope you all have a great weekend. We'll see you next time. Bye now.